Now let's have a look at some of the calculations you will encounter when dealing with partnerships. In our example, we have Daisy and Anna that's in a partnership sharing profits and losses in the ratio of capital invested. The following information relates to their partnership business as at 31 March 2019. Well, there we have Daisy and Anna. And one important thing to note is the ratio in which profit and losses are shared, and it is in relation to the capital invested. But more on that later. Let's first have a look at some numbers. Well, the capital invested from Daisy is 162,000 and Anna has invested 108,000. Current accounts, Daisy's balance is 1,900 and Anna's balance is 700, which is on the debit side. This means that Anna owes the partnership money. Drawings, Daisy had 12,000 and Anna had 8,000 worth of drawings. And then Anna made a loan to the partnership. This means that the partnership owes Anna 28,000. And profit and losses are shared in regards to the capital invested. What we also need to know is their partnership agreement states the following. Interest on capital to be provided at 6% per annum. Interest on drawings 4% per annum. Daisy is entitled to a salary of $150 per month. Interest on partner's loan is at 5%, and profit and losses to be shared in proportion of the capital contributed. Now let's have a look at how to calculate each of these. We'll first start with interest on capital. So now we have Daisy. Daisy invested $162,000, so we'll take that amount times 6 over 100, which represents 6%, which gives us $9,720. If we have a look at Anna, Anna invested $108,000 and we'll also multiply that with 6%. So Anna will receive interest on capital worth $6,480. If we have a look at number 2, interest on drawings, first we will do Daisy again. Daisy had drawings of 12,000 and we'll take that, multiply with 4 over 100, which is 4%. That will give Daisy interest on drawings of 480. And if we have a look at Anna, Anna had drawings of only 8,000, multiply that with 4% and we'll get 320. Let's move on to the next calculation. The next calculation is the salary for Daisy. Daisy is entitled to a salary of $150 per month. So how will this be calculated? We'll take the 150 times 12. Why? Because we have 12 months in a year. And then a total salary for the year will be $1,800. Anna will not receive a salary. Our next calculation will be interest on partner's loan, which is at 5%. Daisy did not loan the partnership any money. However, Anna did. Anna loaned $28,000 to the partnership, and if we calculate 5% from 28,000, we will get 1,400. And then finally, profits and losses are shared in proportion to the capital contributed. So how to calculate this? We'll take the portion Daisy contributed as capital, which is 162,000, over the total of Daisy and Anna's capital combined. Multiply with the net profit. And we'll do the same for Anna. However, Anna only contributed 108,000 over 270 multiplied with the net profit. If you take 162 plus 108,000, you will get to 270,000. And the total of both partners' capital we will use as the denominator. However, we will not be able to determine that amount now because we first need to calculate what's left in the appropriation section. So after we have completed our appropriation section, we will know how much is left for profit sharing. Let's first have a look at our income statement for the year ended 31 March 2019. Things to note is the interest on loan, which is recorded in the income statement and not in the appropriation section. And then we have a net profit of 21,100. We will not go into the income statement in detail because we already covered this in a previous video. We will now focus on our appropriation section. Now, in our appropriation section, we'll start with our net profit and then we'll add interest on drawings. Once we add up our interest on drawings, we'll come to 800. Then we'll add those two amounts and then we'll get 21,900. Now we need to subtract the following. We need to subtract the salary for Daisy and then we need to subtract our interest on capital. We worked out both Daisy and Anna's interest on capital. We'll add that up, we'll get 16,200. And if we add the interest on capital plus our salaries, we will get 18,000. And then if we deduct the 18,000 from the 21,900, we will get 3,900. Now this is the amount that's available for profit sharing. So now we need to go back and calculate how much Daisy and Anna will receive. So now let's calculate how much profit Daisy will receive. Well, the net profit was 3,900, and if we calculate this, we will get 2,340. Let's do the same for Anna. 108,000 over 270,000 times 3,900 will give us a profit share of 1,560. Now after we've calculated each partner's profit share, we can enter that in our appropriation section. Let's have a look at our statement of financial position. Here's our statement of financial position, but since we've covered this in a previous video, we will only focus on the capital employed area. So what you need to not do is write down owner's equity. You need to replace that and write down partner's equity, because we won't be dealing with a sole owner, we'll be dealing with partners. Then we enter our capital for each partner and then we'll enter the total. After that, we enter the current account balance, and please take note that this is the opening balance, and also take note of Anna's 700, which is between brackets. This means that Anna had a debit balance of 700. Then we add our interest on capital, we add the salaries, we add the interest on loan, and then we add the profit share that was calculated in our appropriation account. Then we add them up and then we subtract the drawings and the interest on drawings, and then we get our final balance. And then if we add these two up, 3,280 plus 420, we will get 3,700. And then finally we will add our non-current liabilities. This is the loan from Anna of 28,000. And if we add that, we'll get a total for our capital employed of 301,700. And please take note, the amounts you entered here is exactly the same as the ending balance of our current account.